Good morning. This is Mayor Valensky with the Driving Market. So today we're going to have a shortened version because it's Memorial Day in the States and therefore US markets are closed. All right, I want to focus on a couple of things. Let's look at oil. Oil is slowly creeping up, and you can see it by the actual price at the pump is just near a few pennies away or a few cents away from all-time high. In fact, in California and Chicago and other states, it's already surpassed the all-time high. And I heard rumors or fact, whatever the case may be, that in California it's already $8 a gallon. Remember those days when we used to go to America from the UK or anywhere, it used to be 124 a gallon, 117, 137. Maybe we used to say, wow, the gas, petrol is so cheap in the States. It's amazing. And now it's $8 a gallon. Still slightly cheaper than the UK, but still $8 a gallon. And that's because the underlying oil price is creeping up. It seems to have lost the attention of the analysts, the economists, because as oil increases, then obviously that's going to add oil to the fire of inflation, which is a bit of a pun. Anyhow, so you've got oil that's increasing, and it's now running at around about $115, $116 a barrel, and it's likely to go up in the near term to around about $130 a barrel. And by the end, I reckon by the end of July, it'll probably be about $150 a barrel. So let's look at why oil has gone up. Oil has gone up for two main reasons. Obviously, the war in Russia and Ukraine, which has no end in sight, and that's put a big impact on oil because of Russia is the fifth biggest producer in the world and it's now sanctioned. You've also got Iran, which is sanctioned because Iran's building a nice little nuclear bomb in order to threaten the world with, or at least the immediate region with, and the world seems to, again, ignore the hard threat from Iran. But they're building a nuclear bomb and their oil is also embargoed, also sanctioned. The other factor is that you've got all the countries now are coming out of the global pandemic, coming out of the corona COVID-19 hit that the world took. And now most countries have reduced or cancelled all the restrictions. So therefore, they're expecting economic growth and economic activity to build up. And as a result of that, there's a greater demand on oil. You do have one other small factor, which is the summer holidays. Now, in the summer holidays, there's a lot more traveling done, especially in the States, and therefore the demand for oil goes up. So you're going to have a spike in oil over the next few weeks and the next couple of months, especially over the summer period. And then oil will continually drive up to around about the 150 level. That will, as I said earlier, have a big impact on inflation, a big impact on prices, delivery of goods, and everything associated with it. So oil is the next best thing to push up. The other factor you want to look at is the US dollar. Now, the US dollar is likely in the near term to come down slightly because the risk appetite of investors has come back as a result of the Thursday, Friday solid retail earnings reports in the States. And as risk appetite comes back, then investors sell the dollar, which is more of a risk-averse currency and a safe haven, and they'll go into riskier assets. But what's concerning regarding those crypto traders is that Bitcoin has not moved. In fact, it's moved sideways, which is a very concerning sign. I red flagged it last week and said it's about to go into bear territory, Bitcoin, and it's just hanging around there, and it looks like it's going to go to the downside. We're all the way down to 20,000, and I wouldn't be surprised if it actually goes down to 8,000 on Bitcoin. I do think it's about to take an absolute trashing. So that's some of those crypto. That's something for those crypto traders to look at. Regarding precious metals, I've been asked by a viewer and a few viewers, what's the view on precious metals? It's the same I mentioned yesterday. As long as you have a weakening dollar, you're going to have weakening precious metals. Overall, there's a high demand for precious metals, but it's purely based on the US dollar. So as the dollar goes down, that's going to have a big impact on precious metals. So the precious metals in the short term is going down south. That's more or less it. The US Treasury, very interesting. was it's running at 2.76%. So it looks like there is a lot of buying of the US Treasury. And in spite of the markets going up last week, it looks like investors are still piling money into the 10-year Treasury as a safe haven. My view is, I want to reiterate, so it's absolutely crystal clear, the NASDAQ by the end of this year will be 7,000. The Dow's going to fall another 30-40%, and the S&P's got about another 40% to fall. So just to be absolutely clear, I'm a massive bear, and I can see these markets absolutely crushing. Mayor Valensky, driving markets. Have a good day.